Peter Lynch, the legendary stock picker who ran Fidelity Magellan's fund for 13 years, made an interesting observation in a speech he gave back in October 7th, 1994. Here is what he said. Some events will come out of left field and the market will go down, or the market will go up. Volatility will occur. Markets will continue to have these ups and downs. Basic corporate profits have grown about 8% a year historically, so corporate profits doubled about every 9 years. The stock market ought to double about every 9 years. So I think the market is about 3,800 today or 3,700. I'm pretty convinced the next 3,800 points will be up. It won't be down. The next 500 points, the next 600 points, I don't know which way they'll go. So the market ought to double in the next 8 or 9 years. They'll double again in 8 or 9 years after that, because profits go up 8% a year and stocks will follow. That's all there is to it. When Lynch says the market, he's referring to the Dow Jones Industrial Average, which closed at 3,797 on the day he gave the talk. So compounded by that 8% growth rate over 27 and a half years, that would get you to the present day and a level of about 31,520. Today, the Dow closed at 34,911. If you use the S&P 500, which closed at 455 on that day of Lynch's talk, then you'd get to about 3,778 today. And today, the S&P 500 closed at 4,462. Now that's some pretty good basic insight. At that time, Peter Lynch was not predicting the price point of the market in the future. He was simply talking about how markets trend over longer-term periods while acknowledging short-term volatility. Keep this in mind when you think about fundamental market truths. And speaking of volatility, let's take a look at the charts. And just one chart today, the 3-year weekly chart on the spiders, the SPY, and the close on Tuesday was 445.04. As you can see, top there, move on down. We got the bottom and basing headed on up, a reflection at that point back on down, but it looks like we may be heading finally on our way up. And by the way, that looks like somewhat of a small cup and handle. But let's move on down here into volume. Volume looks fine with the decline moving through here. Then down to the MACD. This, once again, is one of my favorite formations for the MAC. The move all the way down to the bottom, maximum negativity, move on up, a reflection back down because the market's not strong enough to move on through. But you can see that that reflection is very weak in itself, and the fast line only comes down slightly below the slow line, which is in red here. Both the fast line in black and the slow line are near that zero line, so there is decent strength in the markets. Pretty soon, that fast line is going to move on up and through the slow line and up and above that zero line. Moving on down here to the histogram, you can see that bottom basing, move on up, reflection at that point. Again, just a slight downdraft, and then the move, say, sideways, and then up we go. So soon enough, the market will be on its way. It doesn't matter what the pundits tell you on TV. It's gonna happen. Same thing here, you can see the price rate of change, consolidation down here. It wants to move up. We're a little ways from that zero or midline, but it's going to get there soon enough. I would imagine within the next week or two. Here, the RSI is already strengthened. It's at the 49.96 level, right there at that 50 or midline, wants to go up, and you can see that. Moving here into the stochastics, same thing. Fast line already moved up and through the slow line with that bottom and basing near that 50 line. it wants to move. Down here, lastly, to the Williams. The Williams is always the first to move up and above that 50 or midline. It came back down. It stopped right above that 50 line, and now it wants to head up. It's going to head up into that overbought territory, say between that -20 and 0 level. I would imagine it's going to be there later this week, early next week, I think, at the latest. But everything finally seems to be trudging forward, and I think given the economic conditions that we're experiencing right now, I'm going to say that it's been a struggle, but it'll be well worth the wait. We're going to head on up. Then the next level, we want to make sure that we do cross up and through that previous high just about a month ago, and then of course back here to that all-time high up at this level somewhere above 475. We're going to be watching those points, but I think we're finally on our way up. And for today, that's ChewDog Charts. Thank you.